here as people. Yeah. So that was my that was one of the reasons why I shifted roles, really, honestly, is I did that for 5 years. And before that, I was at a minimum on the road 2 weeks out of the month for 25 years.
That's tough. I get it. I mean, I've made a big commitment this year to try and do, I think, 4 or 5 things, and it was, heart palpitating just to agree to that. I don't know why it's so demotivating for me. When I go, I typically have a good time and I learn stuff, but I did enjoy the TMC one. The TMC one was good. I really enjoyed it enough so that we're coming back again and I'm bringing a sales manager.
Yes, we appreciate that. We appreciate the fact that you'll be joining us in Louisville and in Denver in September. So everyone, thanks for joining us today. We're going to give it just a few minutes more to let people roll in here a little bit, and then we'll get going. Yeah, we have some fun things planned. Are you coming in early enough? You're going to probably not, but you're going to do the bourbon tour?
I can't. Unfortunately, I have the MCT one right before that.
Oh, yeah.
And so I have to stay there through Saturday, so I'll be in Sunday, and I might even have to miss some of the collab labs, which I think is the best part. But if that's the case, I'm going to make sure that the SVP of sales at AFB makes it to that part. So
takes good notes. Yeah,
that's right.
Well, I think we will go ahead and get started here. We still have some people rolling in, but time goes by so quickly. We want to take advantage of every minute. So this is the last week in mortgage today. I'm Faith Howard Mooney, the VP of Member Engagement here at TMC. And I have with me Nick Alphs, who is the president of residential lending at Academy Bank and Armed Forces Bank. And we had the opportunity, we were just talking before we hopped on here, we had the opportunity to meet in Nashville. And I always come out of every conference, I come out of conference having met a new person and someone that I really enjoy being around. And in Nashville, for me, that was you.
I appreciate that.
Yeah. And so have loved the fact that we're here today. We're going to talk a little bit about kind of some of the things that you're doing. But first of all, I would love it if you would just share a little bit kind of about what your bank model is. And when I introduced you, I said 2 bank names. So if you could bring that into the equation, that would be great, explaining that to everyone as well.
Sure. So I told you earlier, I think one of the biggest things I undercomplicated when interviewing for this role was the fact that it was 2 banks, which is proven to be complicated on several levels, including getting our Fannie tickets for both and our Ginnie tickets. It's been an interesting run, but it is also unique and great in that we can take advantage of 2 separate brands, 2 separate models. So on the Academy Bank side, it's a very traditional retail shop, shaking hands, kissing babies, happy hours, that type of stuff. And we have core markets, which is Kansas City, Denver, Scottsdale, and Minneapolis, a little bit of Northwest Arkansas. And it's just as retail as you would think. And then on the Armed Forces side, obviously we have a heavy focus on veterans, but we do all sorts of loans. And it's more of the hybrid model where to a portion of them, we provide some level of leads that we purchase through lead vendors. Some of them, I would call them more retail, but national retail that have come up through the consumer direct ranks and have, landed a realtor group in Texas and a realtor group in North Carolina and wherever. But it's the more hybrid type model where they're in front of their computers and their happy hours are more talking on calls like this and teaching other realtors. And then you have the lead side as well. So it's great to be able to take advantage of 2 different models and 2 different levels of branding. One is very heavy veteran and one is very heavy retail, but they can both cross over and leverage each other in an effort to help salespeople a little bit.
Yeah. Advantages and disadvantages. It's like licensing and tickets we talked about a little bit just becomes some of the more complicated things, but they're definitely, I could see.
And being the sales guy at heart, I came up through the ranks many moons ago as a loan officer. Of course, I only saw in my head the positives and didn't think through the complicated parts, but we're trying to figure it out with TPO relationships and all that. We'll get there. It's just been a lot of stuff that I didn't consider when coming on, but I'm happy I did.
Yeah. And one of the things that I love to talk about with our lender members whenever I have the opportunity to be on the phone with them is just kind of like, how are things going? What is new? And one of the things that we were talking about before we hopped on in the recording today is just like how things are going for you and if you've seen any changes. So kind of just share with me, just in general, like where are you guys at and what are you seeing?
Great question. Unfortunately, everybody in this industry is struggling to some degree. I feel very fortunate that we are in a really good spot. When I got here, not to say that I changed the tide, it was the formation of the complete team, some of which were here and some of which I brought on. We were in a decent hole and we dug out well. We got as creative as we can possibly get. We were pulling every lever on the hedge we possibly could. And we scrapped back to only losing a base 1.5 basis points last year, and we're off to a very profitable start, which is great. And there's been a lot of creative ways to get there. I mean, it always goes back to the same thing. In down markets like this, you need really good originators, and you have to be able to have hard conversations when it comes to both sides of the house, whether that be fulfillment or performance management, which is always a tough conversation to have, but the best way to survive this market is to have the best originators you possibly can, and then have tough conversations. And then more importantly, have really smart secondary folks. One of the things that we did last year that I thought was a little bit unique, we started holding loans a lot longer and leveraging AOT transactions so we could maximize the interest that we held for sale. And we ended up that this shop prior to me was, I think, gaining around 8 to 10 basis points in interest held for sale, and we got as high as 39 basis points, which is really good. If we didn't have that interest, it would have been tough to get to positive or even get to the little negative we got to. And you know, it's another benefit to hedging, which hedging has taken a beating of recent, because I don't know of anybody that's getting the 15 to 20 basis points that are evangelized across hedging partners, but I think it's probably more in the 7 range, 5 to 7 range. But it's much easier to get into a rhythm in post closing when you're doing mandatory commitments. So we could do two a month, and then we could hold all the loans up until then. And it's really been a difference maker for us. So I would say overall we've done really well. We've landed some really good producers, and we have a lot more coming on board soon. And even though I think the market this year is going to be a really tough market, I think it's going to be fairly similar to 2023. I think we've built a good enough foundation to not only survive it, but really do well. And I have to say, like I told you earlier, it's really a testament to our C-suite of the bank, which is the Dickinson family, who owns both banks, and them allowing me to come in, prove some wins, prove that we know what we're doing, we're good at what we're doing, and for the most part, they've allowed me to be as creative as I possibly can. Which I'm sure some of you out there know that when you don't have that support, it's a challenge. When you feel like you're on defense the whole time instead of playing offense. So I'm happy to be here, and I'm happy that they allow us to be as creative as we can to try and turn the ship.
So for those of you watching, when we were talking earlier, Nick didn't take any credit for anything at all, which is one of the things why I liked you when I met you. And I said, I'm sure you did have something to do with that, because there's obviously, as you're going towards this path and the places that we've been in 2023, it's a journey to get to that place where you're profitable, and you kind of need everybody working together and on the same path of that journey in order to really make that happen. You kind of can't have one path out of sync. It's one of the things that we see with some of our community banks in times within the network, in times where it gets hard, instead of like digging in and finding a different way, instead they choose to kind of exit and back off and wait until the market's in a different place, and then try to come back in when you've been out a little bit and then you're coming back in. And so that
I appreciate that. And I try to be as humble as I can, but the reality is I'm being honest. One of my favorite books, of course I'm going to butcher it because I've read it like 5 times. It's like the best damn ship in the Navy, I think is what it's called. And it's all about like trusting your people and challenging them and empowering them to do whatever they want to do to use their expertise. I think oftentimes leaders fail in trying to figure everything out, and it comes from a good spot. But the reality is, if you have smart people around you, just let them go and let them do what they do. My secondary guy was the one that I was like, look, you need to pull every lever you can. We have some movability when you're hedging versus best efforts, where we can play some games to try and maximize our revenue. And it was actually against our hedging partner's advice, but he was like, I think I can do this. And I was like, let's go, let's try it. If we don't, then great, we're in the same spot. But if we do, then we've thought of something that maybe someone else hadn't. And I don't take credit, because between my SVP of operations, who I would argue is the best in the nation, my SVP of sales at Armed Forces Bank, SVP of sales at Academy Bank, and my secondary manager, it's an absolute dream team. And then it just goes down from there. When we have a great culture where everybody appreciates everybody, and we have great originators because we've built a good value proposition, and then we have great folks in operations because they believe in their leaders. So yeah. I don't take the credit, and I do like to think of myself as being humble, but the reality is, if I didn't have that team, we wouldn't be as successful, and that's just the truth.
I always say, it's all about the people, always. I mean, really, honestly, almost no matter what situation you're in, it's all about the people involved in it. And I do think if you really focus on that and the people and surrounding yourself with the right people, I think kind of a lot of times the rest of the stuff a little bit lands in the right place.
Yep.
You have a much better
getting the right people, but then also it's really about empowering them. I mean, if you don't empower them to go use what their gift is, then you're wasting everybody's time. And we're in a situation where, my leaders, the C-suite, have allowed me to do what I need to do, and then I allow, them to do what they need to do, and it all comes together. And as long as we have a good culture where we're all being nice to each other and we're all being helpful, I think the rest of it just figures itself out. But it starts from the top. You gotta have a C-suite that believes in you and is allowing you to do what you do, and then you have to believe in your crew and let them do what they do.
We did not talk about this before, but it's one of the things that I have seen a little bit of out there in the industry, and it just seems like it's a little bit different than it used to be on the production side of things, or on the LO side of things, whatever you call that organization, is that it used to be, and for a long period of time, people were always just chasing the dollars, right? They were going to go to the place where they earned the most, and they were going to shift jobs quite frequently in order to get to that spot. And it almost seems like in the last, I would say 6 months to a year, people are it seems like that particular group of people are focused on things a little bit differently than what they used to. And yeah, it's about the money. It's about the money for all of us, to be perfectly frank with you, and our owners, and it is. But it seems like there's a little bit more focus in that group of people on culture, stability, finding the right spot for themselves and how they feel and how they want to do their work and everything than there has been in the before. And as you've grown and added some people, do you think that that's true, or do you think that there's still going to be, when things change a little bit and people are looking for LOs, there's still going to be this shift of LOs that always seems to happen?
What a good question. So I used to run a pretty large consumer direct shop. I suppose I can say the name. I don't know what the deal was, NASB. And I brought a couple of people over here with me when they exited the market. Well, one of the things we touted is we had really good producers, and we had no turnover for years and years. And I think it is about the money to a certain degree. It's always about the money, to your point. But I do think it has a lot to do with the value proposition, right? I mean, you can have a comp plan if you're an LO that pays you 200 basis points, but the reality is you're going to be priced out of the market. So then you lose your realtor partners. Or you can have a great comp plan and absolutely no support from leadership. And that just becomes anarchy. I have this theory of you can have, if you have good coaches and bad players, you're not going to get anything done because the players are the ones doing the work. If you have bad coaches and good players, it's going to survive for a while, but it's ultimately going to turn into anarchy, where nobody knows what boundaries are where and who needs to do what. But when you get good coaches and good players, it's something to cherish. And I think good LOs know when they've landed both, right? Maybe it's not the highest comp plan, but it's not that far off, but you have more arrows in your quiver from a product standpoint. And that allows you, and also, good pricing, right? So that allows you to go out and gain realtor partners. So if you can do, 100 loans at 100 basis points, it's better than 20 loans at 150 basis points. And I do think that your more seasoned loan officers, when we talk to people all the time, we've added like crazy with top producing loan officers. And when we chat with them, it's about transparency, where we're good, what we're about, how much we pay and what our products are and what our pricing is. And a lot of them just say, oh man, your pricing is great. Your comp is a little bit less, but I feel like I can do a lot more loans here, which ultimately gains me more partners. So long answer to a short question, is I do think at the heart of it, it's about the money, right? Like you want to go where you're going to be valued for your contributions. But a very close second is a value proposition overall, and strong leadership that is honest, transparent, there for you, there to help you whenever you need it. And we learned this over the last year because when NASB exited the industry, you don't know everybody's going to land, right? We're all just trying to figure it out. And me and my leadership team there spent a month trying to get all of our LOs and some of our support folks landed at local competitors before we even knew we were going to land here. And then we came here, and then a lot of them followed us here. So it says something about just trying to create a good value proposition. And that goes for a processor, that goes for an underwriter, that goes for a post closer, that goes for an LO, that goes for an LOA, that goes for an SC. I mean, create good, fair value propositions, and good things will happen.
Yeah, I do think that people are looking at more of an overall package of things. It's how does this all work together, and how does this work to me? I did love your analogy though of anarchy in both of those situations in the extremes. That it's like it kind of does need to be like this fine machine that all works together and everybody appreciates each other. So I love that. That feedback. Are there other things like on your journey as you've reached profitability? Are there other things of note that you think that you've done that have made a big difference?
So let's see, hedging, producing, loans are the big ones. And one that's just often forgot about, and it's really easy and it doesn't cost anything, is just if you create a really good culture, it can make things more profitable. It sounds funny because it's gray, but we've had to be in the unfortunate position of reducing hours for operations and doing all the things that we need to do. And whenever you have a really good culture where everybody's nice to each other, which is the basic rule here, we're all going to be nice to each other. We're going to go out of our way to thank people when they go the extra mile. It makes operations folks and LOs all understand, gosh, we are on this boat together, and we are going to get through this, and we are going to do what we can do. And it sounds silly, but culture can make things profitable. Just everybody getting along and being nice to each other. And then what happens is, you have the closer that is happy to stay till 6 p.m. to get that last CD out, or the underwriter that's happy to underwrite that loan, during lunch while they're working. And all of a sudden, things become more efficient and they become more effective. And then the LOs tell their buddies that, hey, my loan's closed here on time. And it becomes infectious. And that's probably the base foundation level, in my opinion. And once that's situated, there's a real dollar value. I don't know what it is, but it's worth something.
It's equate that good old I always call it emotional buy-in. If You know, if you're all in the same place, then everybody's kind of emotionally bought in. And I do think it's contagious.
Yeah.
I think not only in your organization, but I do feel like your partners, so your referral partners that send you business and everything, if everybody gets along with everybody, then they want to work with everybody that gets along with everybody, and they want to be part of it too.
Yep.
So I
When
do think
the processor and the LO are nice to the title company and nice to the realtor, and then on the AFB side, you're at a disadvantage, right? Because we're all 50 states. We're all 50 states for both banks, but like I said, the one is more retail oriented. But on AFB with the hybrid closings, we can't be at the table. And if you've created a bad journey for a realtor or a title partner,
that's all they know.
your client, and they're going to be happy to tell them about it. But boy, when you've done a really good job for them and they're 10 states away, they are happy to sing your praises, and that's a good thing, especially if you're not even in the office. So,
well, right,
it becomes protection. I agree.
and you never know, where that's going to lead. You think of the direct people that hits, but obviously people share things with other people. Our industry is pretty small, even
Pretty
though
small. Yep.
it seems like this big thing sometimes. Everybody kind of knows everybody. It could get you things that you don't even know. You
Right.
don't know where a referral comes from, or who knows who, or who's somebody's cousin, or whatever it is.
Yep.
So I think it's always interesting to backtrack on some of those things and find out. I always ask people if they come to me for something, how were you referred to me? Where did you come from?
Yeah. Right.
And it's usually somebody that I know from somewhere, either in our network or out of our network that I've had contact with before, that said, just call Faith. She'll be able to direct you to someone.
Yep.
Don't know who that someone is, but she'll know or find out for you. So I think that's always interesting.
You know why, Faith? Because you're nice to people. Everybody just be nice.
Okay,
It's
try. I am a work in progress. I always tell people that, but I think it's important. It's like
great.
that's how I would how I would want to. That's how I want to interact with people on a daily basis. So I do think that it is important. Um, let's talk a little bit about one of the things that came up in the news this past week, and it's that millennial Gen Zer. We've seen some back and forth on. Everybody's looking for houses now. Everybody knows that the baby boomers, in sheer volume, dominate the housing market. $19 trillion worth of US real estate owned by baby boomers. So double the amount held by millennials and about 5 trillion more than the Gen Xers. So the topic of it, this sounds so grim when I'm looking back on it now. The topic of conversation was, what happens when those individuals start to pass away or die? What starts to happen? Because there's a large number of people. I mean, I'm one of them, in that age group, that by 2040, the population of 80-plus-year-olds will have more than doubled from where it's at today.
Crazy.
16 years from now, that population will have doubled. And so there are a couple of different things that they've called this, the silver tsunami, or the glacial shift. I just think it's humorous. I love the names that we put things, and I usually try to find at least one that's kind of funny for the week. So when that's anticipated to happen, Gen Zers will be in their primary house buying years.
Mm-hmm.
So what do you think? I mean, what's your opinion of kind of like what happens during that time period? And I mean, is that when we get housing supply back for people?
Well, I mean, for sure. But it's such a fascinating question. I mean, you really, I had to think about this a lot because, you kind of have hot takes here and there, but when you really start thinking about like, how does this play out? I mean, we all know someone who is in the boomer generation. I mean, we have plenty of people at our bank, my mom's friends, where they're actually ready to downsize, but they don't want to because they don't want to pay more for a downsized house on a payment than they would on their current, 5,500 or 6,000 square foot
I
house.
just had this conversation with somebody that lives in the community that I live in, that is in a little over 4,000 square feet house. And
Yeah,
they definitely want to downsize, but they actually did the exercise, which I'm like, well, at least you did the exercise and figured it out before you committed to anything. They did the
yeah,
exercise this past summer of looking
yeah,
for a smaller home, one that they would want to be in, that's maybe easier to live in than all the stairs that they have and those types of things. It would, this last would have cost them double to be in a house twice the size of the house that they're currently in.
that's the problem. I mean, I think trying to think about this critically, it probably has to be millennials that get that, and the reason why is whenever whenever that happens, whenever that amount of supply hits the market, inevitably it's going to drive values down. I don't think we're anywhere near that right now. I think values will continue to appreciate to some degree. But when that does happen, they're going to have to differentiate their house somehow to the next person. And this is just my take. I could even be probably talked out of this, but I think that they're going to have to put some work into their house. And
Yeah.
theoretically, millennials, just by sheer age, will have a larger family by and large. And they will, again, theoretically, from a finances standpoint, be in a stronger position just based on time and life. So I think what will ultimately happen is millennials will gobble up that transfer of wealth, but it'll create some good movement for Gen Zers as well. I just don't know how you jump over the other when you're going to have big houses that people are going to have to put money into to differentiate from the next big house that's going to go on the market.
Yeah.
It's going to appeal to a person that's in a stronger financial position and has a larger family. And I'm not saying that's for everybody. I'm just saying directionally speaking, it sure feels like, the older person becomes more financially sound and has a larger family, right?
Yeah. Yeah. The only thing that I would say that's, so I've got older kids, and so you see their peer group of people delaying having children
Yeah.
and stockpiling their money.
Well, and don't forget about, another good point too is, this is yet to be determined whether this is ultimately good or bad for us in the long run, but parents are helping their kids out a lot longer. I don't mean to like date myself and pull the many moons ago, but I remember at 18, my mom was like, "Go get them, Godspeed to you."
Yeah.
So I did, and that doesn't make me like great. I mean, there's plenty of people that got a ton of help and they're great too. Um, but that's going to factor into this too, right? Like what level is, boomers are going to be set up fairly well in theory for retirement. And they are going to have these big houses with these low rates. Do they try to skirt the system somehow to figure out a way to pass that down to, their kids? And then at what age are their kids? And that could be right on the line of millennials and Gen Z. So I
Yeah.
think it would be very interesting to see how this plays out. If you fast forward, 10 years from today, it'll be crazy to see what happens. And 10 years in the mortgage world is equivalent of what, 100 years faith, at least on age,
Oh my gosh. I hope not.
right?
But maybe some days you kind of do feel that way for
I
sure.
love I love the mortgage memes. The person that looks like they're 80 and they say they're been in the industry for 3 years.
It's going to be at least the same as dog years, right?
There you go. All right, that's fair.
Maybe it's not 100, but it's got to be in that similar age range. Yeah, to maybe dog years. Apply it
Right.
by 7 or 8, whatever that one is. I can't remember, but yeah. Yeah, I mean, I think it's going to be interesting to see kind of like what happens with that. I mean, I think back to the days of like having to distinguish your home differently. Do you remember the like brand new car in the driveway?
Yeah.
And I only remember these things because I was in the appraisal space
Yeah.
and they were trying to equate that, that personal property to
Yeah.
a value to the home. in what it was willing to sell for. When I think about things, I think about things kind of in that manner. It's like, oh, are we going to go back to, those times? If so, I'm lucky because I'm going to be able to sit on the sideline and watch that round when that happens. So yeah.
I think we'll get there. I think that's maybe for the next time we do this together. But that was a different time of packaging a bunch of stuff all in one package that was claimed to be the same thing and that was not the same thing that ultimately ended up, we're not in that boat. I just think we'll see a depreciation based on supply versus demand. And it's not anytime soon.
Yeah, not anytime soon, but we'll wait. And as we get closer to that 2040 timeframe, maybe I'm sure we'll have further conversations about it somewhere.
No doubt about it.
And time goes by so fast. I say that, I think, at the end of every show. We're already at the bottom of the hour. I love talking with you. I think everybody knows that. We have a good time together. I appreciate it. Cannot wait to see you in Louisville. For those of you that are on here that haven't made the commitment to join us and register yet, we would love to have you with us March 24th to 26th in Louisville. And I will plan on seeing you then. Of course, in the interim, Nick, we owe you one. So if there's ever anything that we can do for you, just make sure and let us know.
Absolutely. I appreciate you guys' time today.
Appreciate you. Thanks everyone for joining us.
See you guys.
Bye.